Hi everyone, and welcome back to the new episode of our Brown Bag Meetup series. I'm your host Alec, and if you're new here, this event is hosted by the blockchain professionals community, and we are kind of a think space of blockchain professionals, of blockchain engineers who are interested in this technology, and for people who are interested to accelerate its early adoption. And we host such meetups every Tuesday. And please subscribe to our social media channels and visit our website to get all the invitations and to find the recordings of the previous sessions. And we also have many other interesting activities, and you can check out everything on our website. We post articles, we host our own conference. And by the way, the last conference was a couple of weeks ago. And please check out our website to find the recordings and subscribe to our social media channels. And today we are very happy to introduce you to our community partners, which is Zeeve. And Zeeve is a no-code platform which has a strong community around the product. And we are very grateful to invite the CEO and co-founder of Zeeve, Dr. Ravi Chamriya. Hi, Ravi. How are you?
Yeah, doing good. How are you?
Yeah, me too. So thank you for being with us today. And I will not take any extra time to, yeah, just a second. Yeah, I'll bring the presentation on the stage. And I think, yeah, you can just say a couple of welcoming words and introduce yourself. And after that, we are good to start. Good luck.
Thank you. Yeah, hi, everyone. My name is Ravi. I'm the co-founder, CEO of Zeeve. Zeeve is a Web3 infrastructure as a service platform, and we help developers, Web3 startups, and enterprises connect with different blockchains and use the Web3 infrastructure in a very seamless manner. Today, in the webinar, we are talking about one of the most talked about topic in last 2 years, which is the tokenization of real-world assets. So, as we have seen, there has been the NFTs has been a buzzword, and there are a lot of use cases we have talked about when we, fungible tokens or non-fungible tokens, etc. But the latest thing is that how to increase the market that started with collectibles. If you see platforms like OpenSea or Rarible, and then in the last year, 2 years, there has been thousands and thousands of NFT projects that were launched across different blockchain platforms. But the real value is because we are sitting on a huge number of assets across different asset classes, and can tokenization help disrupt the whole asset management industry? So that is what we are today discussing about, the tokenization of real world assets. So if you see from a potential market perspective, as per the BCG report, the total market of tokenized real world assets is going to be almost 16 trillion in next 7 years, which is like almost 50,000% growth, vis-a-vis compared to 310 million in 2022. So if you see, there is a huge growth anticipated in the tokenization of real world assets, and we'll discuss why, tokenization, what are the values, what are the challenges tokenization is solving when we talk about asset management. And if you see this trend to $16 trillion, if you see it in 2030, there are other financial assets or other tokenizable assets, then other equity, and across different financial products, whether it be equity, listed, unlisted, bonds, or investment funds, and various other products like carbon credits, etc. There is a huge you know disruption which is going to happen in the tokenization space. So if you see that, is it something new? We have seen that asset management, when digital technologies came in, has already advanced quite a bit. Today we have very mature real estate investment trust kind of system, REIT kind of structures, where an organization or forms a trust in the form of REIT, and then have a portfolio of real estate assets, and then there's a future cash flow, and various investors can participate into it. And then we have exchange traded funds, we have mutual funds, which allow even smaller investors to participate, um, you know taking exposure to equity stocks. So as we see, there are quite a few digitized assets which are already there, But what are the challenges that we see in the existing asset management space? One, of course, is a low liquidity. So quite a few kind of assets, like if you talk about real estate or art or luxury items, there is no option to fractionalize those assets, and that's why if somebody wants to take an exposure in those assets, it becomes very expensive, and that's the reason very few people are able to participate in exchanges or tradability of these assets, leading to low accessibility as well as low liquidity. And then the other side, from a seller perspective, there's a lack of monetization, because if you want to sell off an asset or you want to liquidate an asset, it again is a long drawn exercise. So this is a problem where we talk about the liquidity challenges, but apart from that, there are a lot of challenges. One is managing the ownership of an asset, the complete historical trail, vis-a-vis defining who is the rightful owner at this point of time for the owner, and tracing out all the back history. Like today, we see in quite a few assets, a lot of litigations are there in the real world, real estate assets, where it's very difficult to ascertain. There are a lot of disputes regarding the rightful ownership or the clear title of an asset. And then there are a lot of inefficient systems today. There are a lot of intermediaries. The backend systems are quite outdated in terms of managing increasing assets, and that increase the overall cost of asset maintenance or management. And that again is one of the biggest challenge. So these are some of the existing problems that we see in asset management, and most of the challenges are related to liquidity, efficiency, transparency, and tradability. So and that is where we talk about real world asset tokenization, how blockchain technology bringing in different token standards can disrupt the whole asset management space. So first, let's get a brief overview of what tokens are, and so I'll just in few slides I'll outrun what are the different kind of tokens, how tokenization process works, etc. So if you see, blockchain is a technology which allows you to form trustless networks. And what it means to have a trustless networks, that there is a ledger which is distributed across different nodes, and each person can set up their own node, connect to the main network. So that means anybody can have access to the complete ledger. So that is, they can view all the transactions which are stored in the ledger. Second, any new transaction that goes into the ledger, it goes through a consensus protocol. And again, in the public protocols, anyone can participate in the consensus. So it democratizes the whole participation in the network, make it completely public, leading to a lot of trust and transparency. Once the consensus is reached, data is stored in the ledger. And the third piece is, once the data is stored, it is pretty much immutable. The data cannot be tempered or edited or changed. That again, provides an immutable audit trail of a specific token, the ownership of the token, and different transactions leading to that token. So these are some of the values. And in addition to that, today we have smart contract platforms. Most of the second generation, third generation blockchains today have got smart contracts where you can, do different kind of operations, write business logic, execute triggers, etc., for different kind of token standards. So it's not just creating an asset and simple exchange or trade of it, but you can now write sophisticated rules how these tokens can interact with each other. So that way, blockchain technology has given us a complete new paradigm to manage the assets, which was not there in the digital. Digitization, of course, helped a lot in terms of managing assets vis-a-vis paper-based economy or paper-based asset management. But what we see from a blockchain perspective, having a trustless network where you can tokenize an asset, and there's a complete clarity on the transaction history of an asset, ownership of an asset, and then there are different business logic that you can write, again leading to a lot of transparency and trust among the participants. I think we are looking at something entirely new, very disruptive, highly innovative for managing the assets. So what are the different kind of assets, tokens? So one, most of the tokens that we talk about, fungible tokens, non-fungible tokens, etc., they are all tradable in nature. So they are transferable. You own an asset, in the form of token, and then you can transfer that token to somebody else. But then there's a concept of soul-based tokens also, which are non-transferable tokens, which it's your own identity or your own health records or educational records, any kind of um, credentials that is owned by a person, that is typically not transferable, that defines or identifies a person. So those are non-transferable. So one is transferable and non-transferable tokens. And then common terminology we talk about are like there are two kind of tokens which are fungible and non-fungible. And the name derives pretty much how we define the assets. So fungible assets are assets which are interchangeable with each other. So if you see 1 ounce of gold from different sources, if it's 24 karat gold, it's pretty much fungible. Similarly, oil or different kind of fungible assets, we see commodities, etc. And then we have non-fungible assets. Non-fungible assets are unique in nature, which are not they have unique properties or unique metadata, and they cannot be interchanged easily with each other. So those are non-fungible assets. So when we tokenize assets, we call it fungible tokens. When we tokenize non-fungible assets, we call that NFTs. So that is one big segregation between fungible and non-fungible tokens. And it becomes very important when we go from a technology standpoint to define the process flow, choose the right standards to tokenize. Fungibility and non-fungibility becomes an important property to note. And now there are some token standards which allow you to do hybrid, where you have mix of fungibility and non-fungibility. So you can define those kind of standards also. And within non-fungible, if you see, let's say, to take an example, utility tokens. So your access, subscriptions, etc. So now, a lot of gated access have started. We are seeing a lot of, NFT-based ticketing, etc., which allows you access to an event or a metaverse or different kind of. So the access or gated tokens, as we call them, and then it can be used for licenses and various other places. So these are non-fungible tokens. They have got a utility, and based on the ownership of an asset, you get certain access based on that. The second common type is security tokens. So if you see, we have already started seeing a lot of educational degrees or different kind of credentials are being tokenized, and it becomes very easy. So that again is a very you know common use case today, getting very popular. People are identifying. So take an example of certifications. Tokenizing certification makes it easy for one to share it with someone, and at the same time it's easy for one who has got taken the access of the certificates. They can easily verify it on the blockchain. Today what happens is, if somebody wants to verify whether a certificate is genuine, the only way is to send the certificate back to the issuing authority, and the issuing authority has to verify that the certificate is valid and genuine, and not out of date in certain certifications. But with blockchain based certification, you can tokenize it, and then it can be in real time, it can be verified using the blockchain ledger. So identity, ownership are some of the other non-fungible tokens that are being used. On the fungible side, one, we have seen payment tokens, like all cryptocurrencies or different other payment tokens that we have seen across different platforms. And then there are security tokens, which are like it can be real estate, or it can be luxury items and artwork, etc., etc. So some of these are non-fungible, but some of the items may be fungible. So when we say tokenized assets, what it means is, so one is a terminology which is commonly used today is off-chain, on-chain. So off-chain is something which is outside the blockchain ledger, and on-chain is something which is written on the blockchain ledger. So for example, take a simple case of when you go to a platform like OpenSea, and you tokenize a digital collectible. So you put in the metadata of the asset, and then you put in the image, and the image is stored somewhere, the URL of that image, and information that goes into the on chain within the blockchain. And then somebody who buys that get access to that URL and can pick up the asset. download the file or get access to the file. But the metadata that defines that asset is something which is residing off chain. It's not directly written on the ledger. uh, so that is how on chain and off chain becomes very important as to what all data related to an asset is on chain and what is off chain. And this becomes very important when we talk about real world assets, real estate or physical art or these kind of assets, where there would be a lot of metadata that still cannot be put onto blockchain ledger. So quite a few of data will still reside offline, but yeah, their proofs, their verification proofs or some kind of audit proofs can still be submitted on chain. So asset tokenization is a process by which an issuer creates digital tokens on chain on a blockchain ledger. And underlying asset may be a digital asset, like in the case of bonds or carbon credits, or it may be a physical asset, like real estate, etc. So, but the representation of an asset is what is called a token, which is stored in the ledger. And you can always query the ledger to see the complete transaction history of any token. So if you see the traditional assets like fiat currencies, different, that is, I think, the biggest source today. We have seen stable coins, like whether it be Tether or USDC or BUSD, different kind of stable coins. And then, there are a lot of CBDC initiatives by different governments, which are centrally bank issued digital currencies. So these are all, tokenizing the fiat currencies. And, so those are digital assets, which are basically replacing, or you can say have created a parallel to the traditional fiat currencies. The second, if you see use values, for example, you have tickets, access to something, or you have got discount vouchers or royalty points, loyalty access, etc. So those are, again, in the form of digital assets. They are becoming utility tokens, which allow you access to a certain platform. It may give you gated access, or it may be license or subscription or access to different services. Similarly, if you see assets or securities, like your traditional assets being equity, bonds, or mutual funds, and uh, various other assets slash securities, vis-a-vis we see assets slash security tokens, the tokens which are representing equity in an organization, called a security token, or it may be a debt token, based on bonds, or it may be some kind of loan portfolio, or investment funds, etc. So, so this is how we are seeing evolution of digital asset happening. Of all different kind of traditional assets, now we are seeing digital assets being designed and taken on the ledger, and trying to solve all the challenges that we talked about. So, if you see, there are two type of asset tokens. So since in this webinar we are focusing on real world assets, so we'll be focusing mainly on the asset tokens. But yeah, I just mention a brief about how stable coins, etc., and other NFTs or different kind of tokens are taking care of utilities of fiat currencies, etc. But if we talk about the asset tokens now, there can be two kind of asset tokens. One, which are completely created and exist on chain, and then there are tokens where the asset may be off chain, but there is a digital representation in the form of token on chain within the blockchain ledger. So the first category, like token where there's a pre-existing real asset. So if you talk about non-financial assets like real estate or physical art or any luxury item, etc., or financial assets, it can be a conventional security. Commodities like gold, silver, various other commodities, oil, etc. So these are all real world assets, which are already exist, and you create a digital replica. So there's a combination of on chain and off chain, but the real assets are existing outside the ledger. So there needs to be a proper way of securing these assets, and then create a tokenization. So the how to connect the physical asset and the tokenization process, so that together it makes sense from a regulation, security, compliance perspective. The second are tokens which are native to the blockchain. So there are a lot of bonds now which are natively issued on the blockchain. It's not that there is a bond which is existing in the real market and you are tokenizing that, or carbon credit which exists in the real market and we are simply tokenizing it. But now you can the there are issuing platforms based on blockchain where you are creating the asset on the blockchain itself. So the complete life cycle of an asset, starting from origination till the disposal of the asset, is throughout managed on the blockchain. So those are assets which are tokenized assets that we call. They are native to the blockchain. So like bonds are being, different kind of debt securities, including bonds. And then equity is also now being done in the case of DAOs. This is what we see, that the complete tokenization workflow is managed through smart contracts, and it's completely on chain, and they are not dependent on the external market, and so these are completely native to the blockchain. And these kind of assets are easy to tokenize, and that's why today we see initiatives across different asset classes, both native as well as where there's a combination of on-chain, off-chain, but these are low-hanging fruits, and that's why we see much more mature platforms who have built native tokens or native tokenization. Um, so what are real world assets? Dividing them into tangible and intangible assets. Tangible is something that we can, touch and feel, like real estate, art, luxury items, commodities, etc. And then, intangible items like brand equity or rights, or, it can be mining rights, or it can be any other rights or quotas or intellectual properties, etc. So these are intangible assets. So all these kind of assets are being tokenized now. We'll take some examples later in the presentation. So, summarizing again, what are the benefits? So, one, talked about increased liquidity and accessibility. These go hand in hand. What tokenization allows is that once you have tokenized a real estate, you can fractionalize that into smaller tokens. So, there can be 1,000 tokens or 10,000 tokens which can represent a specific asset. So now, since you have broken down the asset, which let's say is $1 million asset, which you have broken down into multiple units, and that each unit may be $10,000 or $1,000. So then we make it easy for even small to medium scale investors or individual investors to also participate in some of the assets, which cannot be done today. So that helps a lot to, one, increase the number of investors who are participating in the whole asset management, thereby increasing the liquidity, and also leads to higher accessibility. And then from a seller perspective, of course, it helps them um, dispose of the asset, so it manages the asset management. Then there's a whole piece of transparency and security. As I mentioned, when we tokenize assets on the blockchain, there's an immutable audit trail on the blockchain network, and anybody can validate, verify any transaction, existing, current ownership. So it becomes very simple. To take a simple example, today, let's say, in most of the asset management, there's a registry which keeps a tab of the existing ownership of the asset. For example, if you take stock market, so if and you take any organization stock. Now, what happens is when the organization or the company declares dividend, then a date is announced, and on that date, then from there is a registrar which is managing the um, who are the existing owners as on that specific date, and then list is made, and then dividends are given. uh, so in the front end, we still see a lot of maturity has come in as far as the digital interfaces, user experience is concerned. But the backend systems, the whole settlement time is still very long. It's very expensive to manage these, you know, the asset transactions or the information about the asset transactions. And just imagine the same thing in a blockchain space where you have the registry embedded as a smart contract, and you can simply query and find out who are the rightful owners right now who are owning the asset. So with one simple query, you can get all the wallet addresses which own a specific token. And if you want to, let's say, share the future cash flow or any kind of dividend or yield, that can, you can create a distribution contract and it can automatically be done. So the whole backend process, which is settlement time of T+2, T+3, can be cut down to near real time or in a very shorter span of time. And we have seen we have a lot of partners and customers who are using our platform have reduced the settlement time from, let's say, T+3 to less than few hours. So transparency and it becomes like security. We'll talk about liquidation risk, like what because what happens is that blockchain one is very secured, all the data is immutable, so there cannot be any tampering of it. So that is one, give a lot of trust and transparency and security to the tokenized assets. And then in addition to that, as the networks like Ethereum, Polkadot, Cosmos, etc. are becoming larger and larger, there is no possibility of anybody taking over these blockchains. There are now thousands and thousands of different organizations who are managing these blockchains, securing these blockchains. So as the blockchain networks are growing bigger and bigger, the trust and transparency factor of these networks is increasing very strongly. And then with layer two concept coming in, majority of the chains like Ethereum or Polkadot, they are focusing on decentralization and security. So that again gives a lot of comfort to different enterprises or startups or fintech players to get into asset tokenization. And then automation and efficiency, again with smart contracts a lot of processes can be automated. And since every data is very well organized, there is a standardization of data, which becomes very important, because as we know, data management itself is so broken across different players today. And with standard token standards and interoperability of the token standards, or composability, how the smart contracts are designed, plays a very important role and brings in a lot of efficiency, where two different products can be combined together because the token standards are identical. So this is helping increase efficiency in not just managing the backend infrastructure, but also helping design new products, solve some of the problems which are a lot of these kind of problems are there in the traditional systems. So now coming to how do real world asset tokenization process work. So there, I think there are three areas. First area is that we need to secure the asset. You know, when the FTX scenario happened, there's a huge buzzword that has come up, is the proof of reserves or proof of assets. Now, what is proof of asset is basically, if you see the FTX scenario, which was a centralized exchange, the problem was that FTX was an exchange. People were depositing their tokens, so as an exchange platform, they had custody of huge amount of assets, which actually, from a customer perspective, is an asset, but from FTS perspective, it was a liability. And then they were using these tokens to deploy in different investment options. Now, when these investment options, some of them become illiquid. Let's say you put in funds into a token or any kind of venture where you cannot get out easily. So we call them illiquid assets or semi-liquid assets. So there were a lot of funds which were put into these kind of assets. So uh, the asset management side was very poor, and the problem was that none of the other people had any transparency on it. So just imagine that all the liabilities of a centralized exchange and all the subsequent usage of that funds in the form of assets, wherever they have deployed. If that is transparent, you can easily see the gap between the asset and liability, and these kind of issues would not be there. The second challenge is, of course, when we talk about real world assets, you have got a physical asset, you have tokenized it, people have bought those tokens, and then you are not secured about the underlying asset. So then the tokens are worthless. So whenever there is a physical asset which has been tokenized, the security of that physical asset has to be ensured, so that the tokens remain valid. And at the same time, the value of the asset and the number of tokens which represent that value should again be pegged one to one with the underlying asset. So this is the first process, which we call proof of asset, proof of reserves. There's a whole we call it off-chain formalization, or whatever the name may be. But the idea is to secure the asset, identify the clear ownership of the asset, securing it, and then passing on to the next stage, which is the tokenization stage. Now, in tokenization, of course, there are a few areas that needs to be worked out. One is the tokenization process itself, which standard is going to be used depending on what kind of asset is being tokenized. And we'll cover that in one of the later slides. Uh, and at the same time, who is the primary issuer, how the primary issued tokens are being secured, is there a third party custodian, or they are stored in a non-custodial manner. And then all the regulatory pieces have been taken care of. So let's say if you're securing a physical asset, there's a third party auditor which is also ensuring that yes, the asset is secured. There's an on chain validation from the auditor that the asset is there, so it can pass on a trigger to the token contracts to issue the defined number of tokens. And then defining the price of an asset. Some of the assets need to be appraised over a period of time, or some of the assets may have a real value. For example, if you are tokenizing gold, you may want to get the current price of gold using London Bullion Exchange or any other index. So having decentralized oracles become very important to pick up proper enterprise data feeds to ensure that people can assess the value of token or assess the value of the underlying asset, and then vis-a-vis the value of the token which are representing those underlying assets. So the whole process of tokenizing, managing security compliances, primary issuance, custody of it, decentralized oracles to get the value of the asset. That's the second piece. And once the assets primary issuance have been done, then of course third part is to have a sustainable secondary marketplace where these tokens can be traded. So origination of assets, facilitate demand for the tokens. And then of course it smart contract itself acts as a registry at any point of time, who are the current owners of the asset, and if there are any future cash flow. So there is a management of that asset life cycle. So let's say you're tokenizing bonds, so there may be a yield based on the coupon rate that needs to be shared with different token holders over a period of time. So again, automating these processes using distribution contracts, so managing the asset management part of it. So these are three major areas. One is to secure the underlying asset, then have all the regulatory compliances, security, tokenizing the asset, and then a secondary marketplace and the asset lifecycle management. So this is how a process of real world asset tokenization. This is a very high level process that I've talked about. When we talk about different asset classes, the nuances would be different. Different jurisdiction may have different compliances or regulations that need to be adhered to. So that again becomes very important. And so there are some very interesting innovations happen defining these token standards, where in one token standard the security can be embedded, or some of the compliances can be embedded into the token contract itself. So we'll talk about that later. Now I'll walk through some of the examples that we see. For example, real estate tokenization. So there's a platform called Realty, which is basically it provides fractionalization of real estate assets, and that allow smaller investors can invest and still invest in larger properties just by putting in a small amount. And so they have a fractional ownership of that real estate asset, and increasingly they are putting in more and more real estate property. So it's a beneficial for anyone who wants to raise funds against property but doesn't want to sell it. They can raise funds by tokenizing the property, and at the same time investors who are looking at property as one of the asset class they would like some exposure to can participate in these tokenized assets. Then if you see from a traditional institution perspectives, there are quite a few news. One is ENY, the whole option ESG is one very interesting area, very solid area where quite a few tokenization projects are being done today. ENY launched the option ESG, for carbon credit traceability through tokenization. So carbon credit tokenization, I think, is one of the most common, apart from bonds, etc., that is being used today. There are a lot of platforms, a lot of initiatives that are happening across different jurisdictions for carbon credit tokenization. And there are various, there's a lot of challenges related to the quality of the carbon credit. People want to have a complete transparency as to the how the carbon credit or carbon offset actually came into picture. And then at the same time, from an organization perspective who are buying these carbon credits to manage their net zero targets, that also become very important. So if both of them are together on chain, it it is solving some of the pressing challenges in the carbon credit industry. And then some examples are digital bonds. So one is the Goldman Sachs launched 100 million euro digital bond, and they did a settlement. It was a trial kind of scenario, but it has proven that yes, the bond can be easily settled, even if there may be one chain or there are two chains interacting with each other. So how the interoperability work, how the whole settlement process will work. So it has established that um, that these bonds can be created on the chain. They can be settled even if uh, the other party may be using different chain, using the interoperability standards. And cuts down the whole need of a depository or a registrar, and then a lot of intermediaries who are managing the backend infrastructure of asset management. And Goldman Sachs also mentioned that right now some of these bonds are being done on permission blockchains, because but as regulations bring in more clarity, some of the technology innovations come in where compliances are embedded into the token contracts. We'll start seeing a shift towards more public blockchains or hybrid blockchains, which are a mix of public and permission blockchains. Another example was Siemens, who issued first digital bonds in accordance with Germany's Electronic Securities Act. It was a 60 million euro bond with a maturity of 1 year. So in this case, it was one, there was no central clearing that was necessary. So again, the central clearing house or depository, that was not necessary. It was proven using this use case. And then, you do not require intermediaries. You can actually sell the bond directly to the investors. So just imagine a scenario where you cut down all the different processes, and you can directly trade the asset. It leads to much higher liquidity and ease of and then reduces the transaction costs also. So bringing a lot of efficiency. At the same time, there's a lot of transaction overhead, documentation overhead that comes into asset transactions, that is clearly cut down by these kind of tokenization projects. And then in for physical equity, so Hamilton Lane's 2.1 billion flagship direct equity fund. So this was also tokenized on Polygon. And so now different investors who want to participate in the fund, it becomes very easy for them. And second, it has also reduced the minimum investment amount, which was earlier $5 million to $20,000. So now, in fact, more investors can easily participate. So what essentially it is doing is reducing all the frictions, because today what happens is if an investor wants to participate in these kind of funds, there's a lot of paperwork, a lot of compliances that needs to be done. If all those compliances, etc., can be embedded into into a smart contract and be part of the ledger, it gives so much comfort, so much efficiency into the process, that more and more investors will be able to participate in these funds. And by reducing the amount, in any case, we are increasing the investor base, thereby increasing liquidity. And as traders can easily sell them, it improves the whole securitization market also. So that somebody who wants to sell off the assets, free up the liquidity, can easily do that, because there are buyers already available in the secondary market. So overall, from starting from the tokenization to creating a very efficient secondary market through securitization, I think is is uh, um, is one of the most beautiful aspect of real world asset tokenization, especially in the equity space. Some, if you see KKR, there was a news about KKR healthcare fund. KKR is a leading global investment firm into the alternative investments. So this was again a very big trial they did on Avalanche. Very successful trial again. Now KKR in fact is getting into more tokenization projects. Similarly, Swift is collaborating with various financial institutions and banks to see how tokenized value can be transferred over, even if different banks are using different chains. So how a proper tokenized assets can be transferred with uh, vis-a-vis the traditional systems, which takes a lot of time. There's counterparty risk, because right now liquidity risk, etc., are being managed by organizations like Swift. So how can we reduce those kind of risk at the Swift level also, and at the level of the different participants? Some of the real world asset tokenization moved by crypto native platforms. So, two platforms which are two of the most famous DeFi platforms. One is Aave, which is a lending protocol, and then MakerDAO. So, they have also now, have been eyeing towards the whole real world assets, because if you want to increase the overall size of tokenized assets, of course, real world asset tokenization is the answer for that. So MakerDAO has invested, what they have done the other way around. So 500 million worth of stable DAI they have put into US Treasury and corporate bonds. So this way, one, they are embracing real world assets, and it helps the pegging of the DAI also vis-a-vis the US dollar, makes it much more secure. And then, the DAO, which is behind the MakerDAO itself, can generate yield from these holdings. So this kind of, and Aave has got into different kind of real estate assets, whether it be real estate bridge loans or trade receivables, lending products, freight forwarding invoices, inventory financing, etc. So different kind of financial products that they have launched with. There's another organization called Centrifuge, which again is enabling invoices and few other lending products um, to be tokenized, and opening up the whole secondary market. So it again opens up a lot of liquidity, because today, if we talk about securitization in the lending market, it's something very difficult, very inefficient. And then, platform like Lendex, which allows you to obtain capital in exchange for future production from their fields. So it's basically whatever future harvest is going to be there, or future produce is going to be there, you are tokenizing that. So that helps the farmers to get the liquidity today that can be utilized to for the farming purposes. And the buyer can then sell these tokens in the secondary market. And then insurance tokenization, I think, is again Nexus Mutual, or there are various few players like OPM Insurance. So they are we are seeing smart contract hacks, or stablecoin default, like what happened with Terra Luna. So these kind of are being risk are being tokenized, so that in the form of insurance, and these insurance they cover whenever some kind of hacks happen, or some kind of exploits or vulnerabilities are exploited. So based on that, it provides the coverage. So these were some of the examples that I talked about. Now, if you see industry-wise demand, so fiat, of course, right now is the biggest market. You see, stable coins, take Tether, USDC, they have got a huge market today. And then if we add CBDC initiatives to it, then we are looking at a very large market as far as fiat currencies, tokenization of fiat is concerned. Apart from that, real estate and ESG, which includes your climate, carbon credit, etc., is something quite big. And then we have the bonds market, bonds and equity. I think are going to be the next big thing. And then some of the other pieces are being collectibles or luxury items, agri products, and physical infrastructure, etc. So some of the platforms that we see, like in the insurance, there's Etherisk, there is Nexus Mutual, uh, multiple assets, as I talked about, Centrifuge, Aave, there are Maple, there are a few other platforms. So across different, you see, slowly and slowly now we have started seeing different initiatives happening in different asset classes, whether it be real estate or physical infrastructure, insurance, or receivables, or energy and utilities, regulatory finance, collectibles, etc. So initiatives have already started, but yes, there are a lot of challenges in terms of regulatory and compliances perspective is concerned. But that, as I think, most of the starters are navigating. A quick on different standards. So ERC20, I think everyone is familiar. The first token standard on Ethereum. A lot of tokens are being used as utility tokens within different blockchains, are designed as ERC20. And then with NFT, we had 721, 1155 standards, which help you tokenize. So all NFT collectibles, etc. But then, when different real world assets are coming in, there are a few standards that have come in. Like ERC 3643 is very common today, especially for security tokenization, one of the commonest way of doing it. In fact, quite a few real estate projects, etc., are also using security token as a way of tokenizing the real estate. Rather than tokenizing individual property, you put that property into an organization, or a set of properties into an organization, something like a REIT structure, and then you tokenize the equity of that organization. So securities, of course, and there are now 3643 standard. And the best part is it has encoded compliance also. And then, combining with various other protocols, like adding decentralized identity, like your ERC 735745, adding that and combining that with the token standards, I think a lot of compliances can be taken care of by on-chain verification. And then we have double two double two, which is dividend bearing. So there are quite assets which has got future cash flows, so some kind of dividend will be given, like your real estate or etc., where there may be some dividend or equities. And then ERC 4626, which is a yield bearing, like for example bonds being tokenized, there may be a future yield. So again, to distribute those, these kind of define within the token standard itself. Tokenized asset marketplace, take an example of like these are the different components. So on the front end there's a tokenization platform which has got a primary issuance, there's a secondary marketplace, and then in the back end you have set of smart contracts, there's a whole tokenization contracts, and then it may be a single chain or multi-chain. And then use platform like Zeeve to connect with different blockchains and build your smart contracts and deploy easily, use the APIs or a node infrastructure to connect with different blockchains. And then there is a whole distribution network. So this is the tokenization platform, and then there's the distribution network. Distribution network, again, based on asset classes, may become very complex. As I mentioned, like you need to adhere to compliances. For example, you have an asset which has got some restrictions that only accredited investors can buy it, or let's say there is a jurisdictional restrictions, only people with identity or national identity from Australia can also can only buy these tokens. So these kind of compliances need to be adhered to. And then the whole custody piece of it, KYC, if you are adding decentralized identity or real world identity into it. So there are various pieces as part of the tokenization platform. And then distribution today, one, quite a few tokenization platform launched their own secondary marketplace. But then at the same time, as we know that all the tokenization today we are talking about are using defined standards. And since they are using defined standards, these tokens can be offloaded to any of the existing marketplaces also. So it can be marketplaces like Aave, or it can be like different DeFi platforms. It can be a decentralized exchange or different lending protocols, depending on the asset class, or third-party exchanges or marketplaces where these assets can be traded. So this is pretty much I wanted to cover on the tokenization side. One word about the regulatory compliances. Um, Quite a few governments have started looking at digital assets, tokenization of real world assets quite seriously. Few jurisdictions have already launched some regulatory framework to tokenize assets, some in Europe, and we are seeing in UAE and various other countries. Slowly and slowly, other jurisdictions are also navigating the whole space, that how this can be enabled, because the value that the tokenization of real world assets bring around is very well established now. It's just a matter of how to understand the technology very well, how to apply the regulatory compliances. Some of these compliances may be encoded into the contract itself or the token standard itself, and some of these compliances will be, maybe off chain, but their verification proofs or can be submitted on chain. So different combinations are being tried today in various initiatives, various customers that we have been working with. So very interesting space, very promising space. So tokenization, anything that can be tokenized will be tokenized. So that is what it is said in the next 5 to 10 years. It's just a matter of having these regulations, compliances, etc., being sorted as people are moving towards tokenizing different kind of assets. Um, where Zeeve comes into, Zeeve is a Web3 infrastructure as a service platform. We have a lot of DeFi customers, NFT customers, real world asset tokenization customers, and different kind of decentralized app builders who are using our platform to connect with different blockchains. So we are a very no code SaaS platform. And it's not just the infrastructure we provide in the forms of APIs and nodes, but we provide rest of the other pieces, whether you want to query, run complex queries on the blockchain ledger data or smart contract data, or decentralized storage. So Zeeve is your one-stop solution for all your infrastructure requirements. So with that, I conclude the webinar. Now I'll open it to for anyone who have any questions, and you can connect with Zeeve. You can connect with us on Twitter, LinkedIn, Telegram. If you have any questions, do reach out to me on LinkedIn or reach out to our team on Telegram, and we'll be very happy to answer you and build together.
Okay, so thank you so much, Ravi. And I think that was kind of it. Yeah, it seems like you've done a very deep research about tokenization of real-world assets and distilled it into one presentation, making it understandable for everyone. And we've got a couple of questions in the live chat. And let me start with the first one. Ashpreet asks, government wouldn't support land tokenization. So, Ravi, what are your thoughts on this comment?
No, so I would say that land tokenization is one of the earliest use case, and in fact, I would say that in fact some of the initiatives are happening in even India also, but there are quite a few other jurisdictions where land tokenization is happening. Yeah, but the challenge is that when some of the tokenization initiatives were started in India, first we need to have tokenization in the form of digitization. But today, what the problem is that a lot of real estate or land or properties, they do not have clear title. So that needs to be sorted before, because blockchain is going to disrupt in the forms of bringing a new technology which is helping you tokenize and solve some of the challenges of asset management. But there are few challenges which only technology cannot solve, right? So you require other pieces also into place. But yes, wherever we see the land records are very well digitized, some of the mature economies, there already land tokenization is happening. And I know of one very solid initiative in India also where land tokenization is happening. It may be a small start. It may take another 3 years, 5 years. Difficult to say at this point of time, but yes, these initiatives are happening and governments are supporting it. Because land tokenization is a separate topic altogether, because there are a lot of alternate benefits that are coming together. Once you tokenize property, you are cutting down the whole mortgages. Today, mortgages is a nightmare. If you talk about any developed economy or emerging economy, it takes 6 weeks to 8 weeks or even 3 months for mortgages to take place. The second, it will solve a lot of taxation, tax collection, or tax related challenges government face. So land tokenization or property tokenization is one area where government is very keen, very interested in this specific asset class. So in terms of specific industries, I think briefly I covered, as I mentioned. See, tokenization is touching every asset class across different industries. The thing is, wherever we see, as I mentioned, some of the assets are like digitized in nature. So the digital piece is already there. You do not need to worry about, long drawn physical asset. So they are, of course, low hanging fruits. And then, real estate being a very large, and again, there's a lot of challenge, especially access to the accessibility challenges. So real estate we are seeing. So apart from fiat tokenization, there's a lot of tokenization happening in the real estate, and then ESG space, carbon credits, bonds, mutual funds, equities. So these are some of the areas, I would say, asset classes, I would say.
Okay, thank you. And another question from Gordon. He says, how do you prevent rug pulls? For example, selling tokens for a property that doesn't actually exist, or that the person creating the tokens doesn't own?
Yeah, Gordon, I think excellent question. I try to briefly cover this within the presentation. The whole concept where I described above the proof of asset or proof of reserves is actually to solve this, to ensure that the underlying asset has not been moved once the tokenization has happened. So one, it needs to be secured before the tokenization event can take place, and there needs to be third-party auditor who can validate and verify it. Second, once the tokenization, there needs to be complete transparency on the underlying asset and its pegging to the tokens. So how many tokens are in circulation? Taking a simple example, let's say there's a platform which is tokenizing gold, and let's say you are tokenizing 1 ounce of gold to one token, right? So, and these gold, whichever be are tokenized, are stored in different vaults. So you need to ensure that whatever inventory or stock you have in the vault, which is audited and verified by different third parties over a period of time or from time to time, maybe on daily basis, weekly basis, depending on how to pan out the whole operational cost of it. And then, to ensure that the tokens which are in circulation, you can easily verify that using smart contracts. So they need to be pegged one to one. So the ounces of gold which are there in the vault should be pegged to the number of tokens which are in circulation. So yes, this I think is one of the most critical factor ensuring the security of the underlying asset.
Okay. And the next question from Sergey. Could you provide a simple example of agriculture harvest tokenization, how to estimate a harvest? Perhaps you have more examples for that.
Yeah, so if you see estimation one, I think the question you may have in mind is how to estimate the fair value of the harvest, right? But this is not something new. This is already happening for, I don't know, ages, where the produce is pre-bought. So if you take organizations like if any FMCG giant like Nestle, so Nestle pre-buy the harvest even before the seeds have been sown. So this is something which is already happening. Tokenization is just improving the process of doing it. So this process is not something new. The whole these are futures market is based on this only, where you bet on a future produce, and if willing, there are a lot of people who are taking deliveries. Similarly, if you take a parallel mining right, so let's say you have got some rights to mine gold or mine coal or some other asset, and you have got the mining right, and you are going to mine that over the next 6 months or 1 year, but you require funds today. So you can pre-sell the the mined asset today and raise funds, and once the mining happens, then the assets can be given at a discount to people who initially put in the funds. So the people who are investing into it, they will also make some handsome profit, and the person who's got the mining rights has got access to liquidity, which will enable him to operationalize it. The same goes here. In this case also, the farmers would like to have funding which can take care of their operational cost of the whole harvesting process. And at the same time, from an organization, you are ensuring of a produce, because you want a predictability based on your demand of product. You would like to ensure the predictability of the supply of raw material.
Okay. So, yeah, another question from our internal platform says, can you provide an overview of the regulatory landscape surrounding the tokenization of real-world assets in different jurisdictions?
So difficult to, because it's not something that I have off the chart, but I know that Switzerland, there are a few European countries who have formed very friendly regulations. But yeah, when I say friendly or proper framework, these are initial experiments or initial regulations which have come up, and they are going to evolve over a period of time. So Singapore has got some regulations come up for digital assets. Dubai has launched some. So there are quite a few countries now who have come up with some basic framework. It may not solve the complete problems of tokenization, but yes, that's a very good start. And then as they navigate different asset classes and face new challenges, of course these will improve. I've got certain blogs written on our Medium channel, talking about where we continue to update uh, what is the existing regulatory landscape.
Okay. So, the next question is, what are your thoughts on yield-bearing RWA in terms of regulation? Tokenizing stocks/bonds, converting them to some kind of tokens would be treated as securities.
Yeah, so I think so, because I think since you're tokenizing stocks, of course, that would be treated as securities. That's in fact in finance term, that's the definition of securities. So they and so again, the idea here is not whether it's a utility or security. It definitely is a security. So they will be treated as security only. The idea is to have a proper regulation which define them as securities, and that is what has happened. So today there are a lot of ifs and buts when we talk about utility tokens. But when we talk about securities, security tokenization, I think that has matured quite a bit. There are few jurisdictions who have got very mature, um, you know, regulations which allow you to securitize or tokenize securities. So that I think is the easiest way of going about when you talk about stocks and bonds. Yes, if you are, let's say, launching a blockchain platform or a protocol or a DApp, and you are launching a token and raising funds against that token, then there is always a question whether it's a utility, or since you are raising funds and you are showing some kind of profit or some kind of value to the investors over a period of time, then you are actually selling equity. So there's a lot of ifs and buts related to utility tokens, but I think with this there's no doubt about that.
Okay, and I think that was the last one for today. Maybe, yeah, maybe Ravi, any other things to share before we wait for the maybe for the last couple of questions? Yeah, I think there are no questions for today. At least, yeah. So if we'll get some new questions, I will address them to you directly, Ravi. Thank you so much for being with us today. At least you uh, have done this topic of tokenization clear, at least for me. And I would love to talk to you maybe in the near future after a couple after we make some deeper research of this topic. And I would like to make an announcement about the next session, which will happen on Tuesday, and we are going to meet with Miha Tutin, who is a CTO at Varigar and Purify, and we will be talking about building components of compliant DeFi. And this session is recorded, and we'll publish the recording maybe tomorrow. And after that, yeah, just let us know if you'll have any questions, leave them in the live chat, and we are always in touch. And thank you so much, Ravi, once again. Thank you, everyone, for coming, and see you in a week. Bye bye.
Thank you. Thanks, everyone. Thanks, Ali. Bye.